Today's hot sheet, I'm discussing home price increases and new home shrinkflation, as well as an update on inflation I think will be welcome to all. I'll also take any of your questions live as today is a free format Friday, February the 9th, 2024. I am Byron Lazine and the hot sheet starts now. What a week it has been here in BAM, in the BAM world. Thank you to everybody who's been a part of it. Thank you to everybody who's a part of the BAM Pro Bowl on Wednesday. You can get that replay by just logging into BAMX. It is now uploaded there. If you're not in BAMX yet, use code Pro Bowl. We extended it another 24 hours, changed the code to Pro Bowl to get 30% off your annual subscription of BAMX. So use code Pro Bowl to get 30% off. And the BAM Pro Bowl is uploaded into BAMX. It's where we upload all of our monthly courses, live streams, the show notes from this show each and every single day, as well as the daily downloads, and our community all lives inside of BAMX. Get the most out of what we do here at BAM by joining the community at BAMX. All right. It's been a big week, but next week's going to be just as big, believe it or not. I have a huge announcement next Friday regarding the future of the hot sheet. So from 1 week to today, from today, live here, 9:30 on the East, 6:30 on the West, as we do every single day that the markets are open on this very show, the hot sheet, I will have an enormous announcement about the future of this show. So make sure that you are subscribed. Make sure your notification bell is on here, the main channel, so that you don't miss that next Friday. Big announcement on the hot sheet. Let's get into it. You can drop your questions into the comment section here on the hot sheet, and I will take any of your questions here today on this Friday, as we do on Fridays. If you got questions about anything, let's jump into today's topics. Number one, we've got a quarterly report from NAR, National Association of Realtors, which is showing that home prices have increased over 85% in U.S. metro areas in the fourth quarter of 2023. So over fourth quarter is typically where you will start to see prices recede, that winter, that seasonality recession of prices, of home prices, usually takes place. But in 85% of major metros, according to NAR, that didn't happen in 2023, a year in which we saw high interest rates, a fourth quarter in which we saw interest rates get as high as 8% in October. Okay, topping out before coming down to even the mid sixes, the beginning of this year. Now we sit in the high sixes, of course, just under 7%. But prices continue to go up while we have high interest rates, or higher interest rates, certainly than we've seen in years prior. Over 85% of metro markets experienced home price increases in Q4, with 15% of areas seeing double-digit gains, indicating robust growth in the housing market. Think about that. Quarter four, 15% of major metros tracked by NAR saw double-digit gains. We know that for the year, we saw double-digit gains in places like the Northeast, which were starved for inventory, even more so than other areas of the country. But you've got 15% of these metros seeing double-digit gains in just in Q4 alone. If inventory continues to be at all-time lows, what will that mean for this spring market ahead? Here are some of the top 10 metros right out of the hot sheet show notes, of course, uploaded for our BAMX members each and every single day. Top 10 metros, the highest median price increases: Dayton, Ohio, 19.9%. That's insane. Kingsport, Bristol, Tennessee, Virginia area, 19.2%. Fond du Lac, I sure hope I got that right. If I didn't, you will roast me in the comments, as I would well deserve that. 18.6%. Trenton, New Jersey, 17.3%. Salinas, California, 17.1%. Newark, 16.7%. Oxford, Alabama area, 15.7%. Bloomington, Illinois, 15.4%. Johnson City, Tennessee, 15.2%. And Anaheim at 14.8%. Anaheim, Irvine area, 14.8% in quarter four. Limited inventory being the biggest driver, with still obviously strong demand. The 10 most expensive U.S. markets were dominated, of course, by California, as you would imagine, with 8 of the top 10 markets being located in that state, underlining ongoing affordability issues in these areas. Here they are: San Jose. This is fourth quarter here, according to NAR again. San Jose, Anaheim, San Francisco. You've got Honolulu and Salinas, California. They're in the top 5 for most expensive markets. Well, that number for San Jose, 1.75. San Diego, Oaks Ventura, Thousand Oaks Ventura area at 7. San Luis at number 8. LA, and then Boulder, Colorado. Maybe the prime time, the Dion effect of Boulder, Colorado. Of course, Boulder was expensive before Prime got there, but now that he's home shopping, maybe even a little bit more. An 11.8% jump there and an 849 for average price, but just ridiculous numbers there for the most expensive prices. Lawrence Yun, NAR chief economist, says that homeowners have benefited from housing wealth accumulation. However, many home buyers have been shocked at high housing costs, with a typical monthly mortgage payment rising from $1,000 3 years ago. Think about that. 3 years ago, typical monthly mortgage payment rising from just over $1,000 to more than $2,000 last year. Double up on the monthly mortgage payment, $1,000. I mean, there'd be a lot of buyers being like, really? Those existed just 3 years ago? Fortunately for those buyers that worked with, BAM experts like all of you, bought a home, and they didn't listen to YouTube channels like Reventure, which were telling people 3 years ago, don't buy in this market. I just did on my Instagram, collabed obviously with the now BAM account on Instagram, a reaction to Reventure because he's put out so much of this doom and gloom content. And he actually put out a piece that said foreclosures were going to be really bad in 2023 and 2024. And we're obviously 13 months into that prediction, and he is dead wrong. Go check that out on IG if we're not connected there. Lawrence Yun goes on to say this doubling in housing costs for recent home buyers is not included in the official CPI index, CPI inflation calculations, and contributes to the sense of dissatisfaction about the economy. Sales were restrained due to limited inventory, but increased home building along with lower mortgage rates. We've got an update on home building here in a second. Will not only improve housing affordability, but also bring more homes onto the market in 2024. That's the NAR chief economist take. We've got all of these links, all of the sources available for you inside of BAMX to make it easy, as well as all of the metropolitan areas according to NAR. Okay, so this is the median sale price of existing family home sales, 21 rather, 22, 23, as well as breaking down that 23 fourth quarter. And this is a 4-page PDF. You'll find that inside of BAMX, easy for you to find and grab there. Quarter 4 over quarter 4 changes year over year all the way to the far right, and tons of data there for you to grab all of those major metros, which 85% of them, again, experienced a pop in home price appreciation in the fourth quarter. Okay, moving on to a report from Lance Lambert with Resi Club. Housing affordability, obviously being extremely strained, has changed the way builders are thinking about the product that they're bringing to market. There are many builders now turning to smaller builds across America. Parcel Labs reports that the median square footage for new construction fell by 3% in 2023, marking the biggest single-year dip over the past decade. Doesn't sound like a lot, but the biggest dip in over a decade does, as builders go smaller. Now, it's not easy for a builder to just start going smaller. They've invested a lot of money and resources into the particular plans that they're currently building. Now they have to have somebody go draw up new plans, make sure that their workforce, I mean, you would think going from bigger to smaller would be easier, but you still need to have a functional layout. If you just go smaller and the layout's not functional and buyers are like, what the heck is it? This is just a weird setup, or it's going to be too cramped, you're going to have a hard time selling that product. So not only does the design have to be right, the flow's got to be right, but your workforce has to be able to build a product that feels just as spacious, feels just as nice, functions just as well as the product that you were building before. On last month's earning call, D.R. Horton CFO Bill Wheat told analysts to adjust to changing market conditions during fiscal 23 and into fiscal 24. We have increased our use of incentives and reduced home prices and sizes of our home offering where necessary to provide better affordability to home buyers. So builders are not only thinking, hey, I can bring affordability to the market by incentivizing our inventory, by lowering the mortgage rate to make sure that our inventory sells before existing in the markets that they're competing at, as well as maybe some type of other incentive where you're taking care of closing costs, or maybe you're throwing in some extras as the builder, so, some bonus build outs in that product. And now they're also thinking about affordability in the overall price by reducing the size of the home. Heading forward, nation's largest public traded home builder, that they expect continued gradual moves from a mix shift perspective in terms of average square footage. So 3% drop last year, the largest in over 10 years. D.R. Horton expects that trend is going to continue in 2024, shrinking the average size of new builds across America. In economics, there's a term for when a business reduces a size or quantity of a product while keeping the price roughly the same. Okay, so I guess the price is going to stay the same. This is how they're making it affordable, making sure the price doesn't continue to go up. That's called shrinkflation. We don't want that for our economy. We don't want shrinkflation for the economy. Think about that. Product price stays the same and you just get less of it. Has that not happened though over our lifetime? Who remembers having a nice bag of Lay's potato chips in like the 90s compared to now? That bag has certainly experienced some shrinkflation. Maybe that's the best way to think about it. New single-family homes continue to get smaller. Doesn't mean that the price gets smaller. It means that the price won't continue to rise as fast. In 2023, the median square footage of existing home sales was 1,607 square feet. For new construction, that number was 2,036 square feet. But you can see here that number has gotten smaller over the last couple of years. 2021, new construction was 2,127. 2022 was about 2,100 square feet, and now at 2,036. Curious to find out in 2024, do you think this will be over or under 2,000 square feet? Okay. Over, under in the comments. Let me know. Over or under new construction median square footage for 2024. If it's as big of a drop from 22 to 23, certainly would be under. Okay. 2023 was 2,098 square feet, or 2022 rather. It was just about 2,100. And then last year, 2,036. So 2024, is that going to be 1,900 something square feet for the first time on this chart for sure in 10 plus years? And I'd imagine even longer than that if 2013 started out up over 2,300 square feet. You can see over the last 10 years, the trend has been homes getting gradually smaller on new construction, while existing homes median square footage has slightly increased over the years as potentially some of those bigger homes come to market. Empty nesters that accumulated bigger homes in the late 80s and certainly throughout the 90s and even early 2000s are now putting those homes onto the market. 1,593 square feet on existing median homes for sale in 2013. 2023, that was slightly up over the 10-year period to 1,607, but relatively flat in comparison to the decline we've seen on new construction homes. So what's your thoughts? Will we see an over or under that 2,000 median square footage mark for new construction this year? Love your thoughts on that. I'm sure many of you will be doing a bunch of over-under bets this Sunday as we get into the Super Bowl. What's going to be your favorite bet? By the way, who are you taking in the Super Bowl? Let me know in the comments below. I do have an inflation update, and then after that, I do have something for you on the Super Bowl update. So stay with me on that. Last year marked the 9th straight year, of course, that new single-family homes got smaller. The median square footage for new construction falling by 3%. That's the biggest decline. And you can see here the existing price per square foot continued to go up, 4.2% in 2014, 16% in 2021, 2022, 7.8%. But last year was the smallest gain on price per square foot at 1.6%. So they kind of stabilized prices. Obviously, the market had a lot to do with that. New construction median price per square foot rising in each of the years here over the last 10 years. Okay. In the view of James Hughes, a land developer in Charleston, South Carolina, this gradual shift to smaller lots and smaller homes is being pushed more so by entitlement groups who are trying to get as much development into the building plans as possible before exiting at top dollar. Okay. This market has been flooded with high density sites from entitlement groups. Entitlement groups are not land developers and they're not home builders. These entitlement groups put land under contract, getting the required permits. Okay. So they buy the land, they get the permits, and they have the site engineered. Then they basically sell the paper lot to a land developer and a home builder. They're basically buying land and doing what it takes to flip it over. Okay. The engineering and the permitting process, holding it for that period, and then flipping it over to land developers and builders. They don't necessarily want that high density, but that's what's on the market. Okay. So Hughes from South Carolina, who's a land developer, is saying many builders would like to actually build a different product, but the land opportunities available to them have already been through the permitting process, have the site engineered, are built up for that particular smaller home. And that's what they're kind of stuck with there. It's one contributing factor to consider. And we'll look to see what happens this year if that number continues to shrink. If it follows the 10-year trend, it certainly will. What did shrink in a really good way is the CPI number in December. Okay. A report out this morning on CNBC is that inflation in December was even lower than what was first reported. Okay. The revisions in the CPI, which is what the market likes to look at the most, showed a broad basket of goods and services measured increased 0.2% on the month. They had reported, and we covered it here on the hot sheet, that was 0.3%. So it's less than the originally reported, according to Labor Department's Bureau of Statistics, once they did this revision. While the change is only modest, it helps confirm that inflation was moderating as 2023 ended, and this gives more leeway to the Federal Reserve to start cutting interest rates at some point this year, hopefully sooner than later. So that's a really good way to end a great week here with some strong economic data, some strong inflation data. The Dow is down slightly. S&P rather is up over 5,000. That's the fifth straight week for an S&P gain. NASDAQ is up. So the markets are up. And let's take a look at the 10-year. Was down a little bit off of that news, up slightly right now, 4.183. Obviously, we're looking for the 10-year to continue to move down and get past 4. Logan Motoshami, he had a piece of content out on Twitter X the other day talking about we just don't want to break that 4.25 level. That's when we broke that 4.25 level at the end of last year, October. That's when we kind of skyrocketed up to 5% on the 10-year and broke 8%. So he keeps calling for, as long as we stay below that 4.25 level on the 10-year, which we are there right now, we should be fine. And he makes the case for it should go lower than potentially going higher, as long as we stay below that level. And that's the hope that we all have, so that we can get this number down closer to maybe 6.97 is where we ended the day yesterday. Mortgage News Daily's 30-year fixed survey. The weekly came out, Freddie Mac 30-year fixed weekly, and that came in at 6.64. So that's been holding strong, and the 6.6 there for the last 3 weeks on the Freddie Mac's 30-year fixed weekly. I told you I had some Super Bowl news for you. I'd love to know in the chat who you're rooting for, who you're betting on. Maybe you're just betting on the coin flip. Is it going to be heads or tails? Let me know if it's going to be heads or tails. It's a bet I usually like to make. But homes.com is making an enormous bet. We have an article up on nowbam.com about the bet that they're making in real estate. If you think this portal war, I talk about it on the Real Word podcast, is going away, it is not. Homes.com is investing over $1 billion on the biggest marketing campaign in real estate history, starting with 4 Super Bowl commercials. We have a teaser, unlisted video from Homes.com linked into the article. Maybe Haley, you can drop this article into the live chat for everybody, or you can just go on nowbam.com. It's one of the top. It might be the top article or top couple of articles. Home buyers will see us in top networks, Prime TV, streaming platforms, digital radio, and beyond. NBC, Fox, Disney, CBS, Max, Paramount, Hulu, YouTube, Pandora, iHeartRadio, your favorite podcast, maybe the Hot Sheet. Who knows? We're kicking it all off. The biggest advertising stage in America with 4 Super Bowl ads. That's what Homes.com is doing. They have, of course, the your listing, your lead model. So for listing agents, you got to love music to this, to your ears on this one, because they're pumping in $1 billion to send traffic to their site. If you have a listing, you get your lead. So Homes.com making an enormous move. They've got 4 Super Bowl commercials. I'll certainly be looking for those. I'm sure that you will as well. Be curious to see if any of their competitors have Super Bowl commercials. We'll get to react to those on Monday morning. So something to look at. The full article and the link to that video, it's here in the live chat. It's also available on nowbam.com. I see Go Niners. Who else do I see? What else do I see here in the chat? The coin will land on heads, the Denton Realtor says. I typically always just bet on heads as well. I know a lot of people always like tails never fails, but I just find myself going oppo direction and betting on heads. I see a lot of Niners here. Niners. Detroit. Sorry, Jeffrey Buffington. I think everybody was behind the Lions. A lot of San Francisco. I see. Okay, Dawn's got KC. So we've got like one KC in the chat. All right. We'll see what happens. We'll react to it on Monday morning. There you go. Maria Martin in on the Chiefs. Shout out to Maria. I'm rooting for a good game. I'm rooting for learn something from the Super Bowl marketing. How can I make my business better? How can I make our marketing at BAM better, of course? And what are going to be the real estate related Super Bowls on Sunday? I'm super curious about that. If you're not subscribed, make sure you do so. We have a major announcement coming on Friday about the future of this show, the Hot Sheet. That is on Friday of next week, 9:30 on the East, 6:30 on the West. Subscribe so you don't miss that. You've got another 24 hours here on code Pro Bowl to get 30% off of BAMX. If you're not there yet, you should be. Get the most out of BAM by doing that. I hope everybody has a great Super Bowl weekend. You can get the recording of the BAM Pro Bowl if you missed it in BAMX over the weekend. Be something to listen to for sure. Thank you for all of those that attended live, and thank you for all of the great feedback. Thank you for another great week in the BAM world, and I will see you on Monday, 9:30 on the East, 6:30 on the West. Big announcement next Friday. Until next week, of course, toodaloo.